Let's go to Sean Callow, who is Senior Currency Strategist at Westpac Bank. Sean, I mean, what are your thoughts? Do we get some kind of a revaluation in the next few weeks even?
I think in the next few weeks is probably the right time frame, actually. There was a great deal of excitement in London trade over the New York Times story suggesting, quote, coming days, that you could get a reval plus a resumption of flexibility. I don't quite see the urgency, why there would be quite such a hurry, but Friday after the Chinese close is often the time the policy announcements of all sorts are actually revealed. So the markets will be on edge, but I suspect that it's not imminent, but certainly there are enough signs to believe that something will happen within the next few weeks.
We're also, of course, getting hints that the yuan will be allowed to trade a little more freely against currencies like the Russian ruble, South Korean won, the Malaysian ringgit. Now, you've noted that these are slightly odd choice because they're not big international currencies.
Yeah, I'm puzzled by why that would be suggested. I do note that the suggestion came not from the PBOC itself, but the CFET, so the trading system. I don't know, maybe that's right, but it does seem a little curious why they would be the specific currencies for the next wave. I would have thought, say, Aussie and Canada would be more obvious choices to provide for onshore trade because they are global currencies, they're liquid, and aside from Korea, they actually have quite a larger trade weighting on our estimates with China, particularly the Aussie.
OK, now if you want to invest in the yuan, you can only buy 20,000 a day in places like Hong Kong. You can buy the non-deliverable forward. So there's not a great deal of investment upside on that. Amongst the liquid currencies, you really don't like the euro at the moment, correct?
No, we haven't changed our view on that. We've been bearish for some time, and we recommended fresh shorts a couple of weeks ago at just above 135. So to us, nothing's really changed on the euro story. It's partly about Greece, where obviously the blowouts in yield spreads are a very, very worrying sign. But it's really to a large degree a growth difference of growth versus the US, where we are getting a lot of improvement in the US data, whereas for the Eurozone, our economics team is looking for growth of only about 0.6% over 2010.
So the euro's at 133.5 at the moment. How low does it go?
Well, there's no obvious barrier, I would have thought, until you get down to about 130. I think the 130, 131 area is probably the first obvious target. And from there, again, a lot would depend from the US side. Given that we aren't expecting any real substantive change in Fed policy for the next few months, the yield improvement will have to come at the longer end of the curve for the US. So maybe it starts to stall around there. And obviously there is still a large overhang of spec short euro positioning that will slow the move downwards.
Of course, neither the euro area nor the US economy are looking particularly strong fundamentally at the moment. If you're looking for growth around the world, I mean, we've mentioned China, and one of the few places with a liquid currency is Australia, and you're buying that, yes?
Yeah, still, even at these levels, it's obviously very elevated on many crosses, but we particularly like it against the yen. Now that we're into the new financial year, we do expect greater outflows into foreign bond markets from Japan, that huge pile of savings that they have to put to work. I suspect that that they will reverse the recent trend to repatriate, to sell foreign bonds. And on the Aussie side, it's obviously a strong fundamental point of view on the trade side. The domestic economy is quite resilient. It's not all good news on the domestic economy. It has been a little bit mixed on retail sales and some of the lending approvals, but I think it's pretty clear from the tone of the RBA statement this week that it's confident that the recovery is solidly in place.
Yeah, but an unbalanced recovery led by miners. I mean, economists talk about the Dutch disease, where one part of your economy pushes your currency so high the rest suffers. How much of a risk is there of that?
I think that's increasingly a concern, where you do have, as you say, that huge returns for the resources sector, natural gas as well as bulk commodities. So I think that's a very, very positive story. But of course, it's dreadful news for, say, tourism operators. The strong Aussie dollar hits them very hard, and just in general, the competitiveness in global markets for exporters will be difficult. So But in the end, you tend to buy the domestic story is probably strong enough that the growth will be quite substantial for Australia, because in general it still runs trade deficit, so it's not exactly an export-led recovery overall.
Okay, sorry, did you give me a target on the Aussie? Where do you think it can go to, top end?
Look, the Aussie, I guess, the multi-week, you're probably talking 94 is probably the area we're looking at, 94, 94.20 Aussie US. But clearly we've got a reasonably upbeat US story, so we'd be looking for the greater results on, say, Aussie yen, which we should see in the high 80s, perhaps pushing 90 multi-week, multi-month.
Okay, Sean, thank you very much for that. Sean Callow, Westpac Senior Currency Strategist, on the line there.